Hello everyone, welcome to my channel Learn with Dr. Khizer. This is the part 6 video of income from capital gains. So in the previous session we started with the exemptions which are related to capital gains. Now in this class, if you remember, in the previous session we only completed section 54. So there are various other sections and exemptions we need to discuss. So today we are going to discuss section 54B. So as we discussed briefly, it is applicable both for long-term capital assets as well as short-term capital assets. Okay, so without wasting our time, let us directly start. So section 54B says that following conditions should be satisfied. Here also 4 conditions are given. All the 4 should be satisfied to claim section 54B, and how much amount to be exempted, that we will also see here. So here conditions, first condition is who can claim? Individual can claim this. In the previous thing we saw, in section 54 we saw HUF or individual. Okay, here individual can claim this. Second is, what is the type of asset you need to sell? You would have sold any capital asset, land which is used for agriculture purpose. Okay, so you need to sell the agricultural land. Fine. So this is the second condition. So if you read in detail, capital asset to be sold is land used for agriculture by the assessee or his parents at least for 2 years prior to the transfer. Okay, means that if the assessee is selling in the previous year, okay, that one, or if the parents are there before the 2 years. So no need to get confused here. So second condition is agricultural land is the asset that you need to sell. Third condition is it is applicable for both short term as well as long term capital asset. Okay, so whether the asset is short term, that is the land used for agriculture, is declared as short term capital asset, or it is declared as long term capital asset, for this you can claim exemption both. Then fourth thing, what you need to do with this amount of sale. Okay, you would have purchased the new agricultural land. When you have to purchase, condition says that purchased within 2 years after the date of transfer. So you sold today, from today next 2 years, within that you have purchased the new agricultural land. In that case, that is, this can be claimed. Or if you have not done this, deposit in bank under capital gain account scheme. So if you have done these 4 conditions, okay, then you can claim under section 54B, and you can deduct this amount from gross capital gain. Once again, let me just tell you the 4 conditions. Okay, the first condition is individual can claim. Second condition is agricultural land should be sold. Third condition is agricultural land can be short term or it can be long term in nature. Fourth condition is you need to purchase the new agricultural land itself, but it should be purchased within the 2 years of date of transfer. Along with this, if you have done any deposit, okay, in the bank under capital gain account scheme, if these things are satisfied, then you can claim section 54B. Now how much is the amount to be claimed? This is the question. So here again, as we saw in the previous session, you need to compare this. Okay, so first you need to total up cost of new agricultural land. How much is the cost you have purchased? And if you have deposited any amount in the bank, okay, both the things you add, this you should compare with gross capital gain. Okay, so fourth point, you need to add in total whatever activities you have done. Okay, that should be compared with gross capital gain. Okay, and here you will get the amount of exemption, whichever is low, that you need to take and give for exemptions. Okay, hope this is also clear to you. Okay, I think in the next video I will cover 54D. All individual videos we are going to do so that you will not get confused. Okay, thank you very much.